The financial world is abuzz with talk of Ethereum ETFs, a potential game-changer in the Securities and Exchange Commission's ongoing grapple with the crypto industry. For years, the SEC has approached cryptocurrencies with a cautious, even skeptical eye. This hesitancy stems from concerns about market volatility, investor protection, and the potential for fraud. However, the recent surge in interest in Ethereum ETFs, particularly following the successful launch of Bitcoin ETFs, has put the SEC in a challenging position. The question now is, will the SEC embrace this new wave of financial innovation or double down on its cautious approach? Ethereum, the second largest cryptocurrency by market capitalization, has long been hailed for its potential to revolutionize various industries. Its smart contract functionality has opened up a world of possibilities for decentralized applications, from supply chain management to digital art. An Ethereum ETF would allow investors to gain exposure to Ethereum's price movements without directly owning the underlying asset. This would provide a regulated and more accessible avenue for traditional investors to participate in the crypto market. The potential approval of an Ethereum ETF is therefore seen by many as a crucial step towards mainstream crypto adoption. The stakes are high for both the SEC and the crypto industry. For the SEC, approving an Ethereum ETF would signal a significant shift in its stance towards cryptocurrencies, potentially paving the way for further innovation in the space. However, it also carries the weight of ensuring investor protection and market integrity in a relatively new and untested asset class. For the crypto industry, an Ethereum ETF represents a watershed moment, potentially unlocking billions of dollars from institutional investors and propelling cryptocurrencies further into the mainstream. The outcome of the SEC's deliberations on Ethereum ETFs will undoubtedly have far-reaching consequences for the future of finance. The potential approval of an Ethereum ETF has ignited a firestorm of debate, with proponents lauding its potential benefits and skeptics voicing concerns about the risks involved. This essay will delve into the SEC's historical approach to cryptocurrencies, the basics of ETFs, and the recent developments surrounding Ethereum ETFs. We will explore the potential impact of Ethereum ETFs on the market and investors, drawing insights from leading industry experts. Ultimately, we will attempt to shed light on this complex and rapidly evolving landscape, providing readers with a clearer understanding of the potential implications of this financial innovation. Section 2. A rocky relationship, the SEC and crypto. The SEC's relationship with the crypto industry has been fraught with tension and uncertainty from the outset. Since the emergence of Bitcoin in 2009, the SEC has grappled with how to regulate this new and complex asset class. The decentralized and often anonymous nature of cryptocurrencies has posed significant challenges to the SEC's traditional regulatory framework, which is primarily designed for centralized financial institutions. This fundamental mismatch has led to a cautious and often reactive approach from the SEC, much to the chagrin of crypto enthusiasts. One of the SEC's primary concerns has been investor protection. The volatility of cryptocurrencies, coupled with the potential for fraud and manipulation, has raised red flags for the agency. The SEC has repeatedly warned investors about the risks associated with cryptocurrencies, emphasizing the lack of regulatory oversight and the potential for scams. This cautious stance has manifested in a series of enforcement actions against crypto companies and individuals accused of violating securities laws. These actions, while intended to protect investors, have also been criticized by some as stifling innovation and hindering the growth of the crypto industry. Despite its cautious approach, the SEC has shown a willingness to engage with the crypto industry and explore ways to regulate it effectively. In recent years, the SEC has held numerous hearings and roundtables to gather input from industry experts and stakeholders. The agency has also issued guidance documents and frameworks aimed at providing clarity on how existing securities laws apply to cryptocurrencies. However, these efforts have been met with mixed reactions, with some praising the SEC's willingness to engage and others criticizing its perceived slow pace and lack of decisive action. The SEC's cautious approach to cryptocurrencies can be attributed to its mandate to protect investors, maintain fair and orderly markets, and facilitate capital formation. The agency has a long history of taking a measured approach to new and emerging financial products and technologies, often waiting to see how they develop before implementing comprehensive regulations. This approach, while prudent, has also been criticized for being slow and reactive, potentially hindering innovation and allowing bad actors to thrive in the meantime. The SEC's handling of Ethereum ETFs will be a crucial test of its ability to balance its mandate for investor protection with the need to foster innovation in the rapidly evolving world of finance. Section 3. The Winds of Change. A new era for Ethereum. The crypto landscape has undergone a dramatic transformation in recent years, with institutional adoption on the rise and mainstream acceptance gaining momentum. This shift has been fueled by a confluence of factors, including the maturation of the crypto industry, the growing awareness of blockchain technology, and the increasing demand for alternative investment assets. Against this backdrop, the SEC has come under increasing pressure to approve an Ethereum ETF, particularly following the successful launch of Bitcoin futures ETFs in late 2021. The approval of Bitcoin futures ETFs marked a significant milestone for the crypto industry, signaling a growing acceptance of cryptocurrencies by regulators. These ETFs, which track the price of Bitcoin futures contracts rather than the underlying asset itself, provided a regulated and more accessible avenue for institutional investors to gain exposure to Bitcoin. The success of these ETFs has fueled speculation that the SEC may be warming up to the idea of approving a spot Bitcoin ETF, which would track the actual price of Bitcoin. This in turn has raised hopes for the potential approval of an Ethereum ETF. Several asset management firms have filed applications with the SEC for Ethereum ETFs in recent months, citing the growing demand from investors and the maturation of the Ethereum market. These applications argue that the Ethereum market has become more resilient and less susceptible to manipulation, addressing one of the SEC's key concerns. They also highlight the benefits of an ETF structure, such as enhanced liquidity, transparency, and investor protection, compared to investing directly in Ethereum. The SEC is currently reviewing these applications, and its decision will have significant implications for the future of Ethereum and the broader crypto market. The potential approval of an Ethereum ETF is seen by many as the next logical step in the evolution of the crypto market. It would provide a regulated and familiar investment vehicle for institutional investors to access Ethereum, potentially unlocking billions of dollars in new capital. This, in turn, could lead to increased liquidity, price stability, and mainstream adoption of Ethereum. However, the SEC remains cautious, and it is unclear whether the agency will approve an Ethereum ETF in the near future. The outcome of the SEC's deliberations will depend on a variety of factors, including the state of the Ethereum market, the strength of the ETF applications, and the SEC's evolving stance on cryptocurrencies. Section 4. A rising tide benefits for investors and the market. The potential approval of an Ethereum ETF is generating significant excitement among investors and industry observers alike, and for good reason. This financial innovation holds the promise of unlocking a myriad of benefits for both individual and institutional investors, while also injecting greater liquidity and stability into the Ethereum market. Let's delve into some of the key advantages that Ethereum ETFs could bring to the table. For investors, an Ethereum ETF would provide a regulated, transparent, and convenient way to gain exposure to Ethereum's price movements without the complexities of directly owning and managing the underlying asset. This is particularly appealing for institutional investors who are often restricted by regulatory requirements and internal policies from investing directly in cryptocurrencies. An ETF structure would allow these investors to participate in the potential upside of Ethereum while adhering to their investment mandates. Moreover, ETFs offer investors built-in diversification, as they typically track a basket of assets rather than a single security. Beyond ease of access, Ethereum ETFs could also contribute to greater market efficiency and price stability. The introduction of a regulated ETF would attract more institutional investors, bringing with them significant capital and sophisticated trading strategies. This influx of institutional participation would likely lead to increased liquidity in the Ethereum market, making it easier and less costly to buy and sell the cryptocurrency. Increased liquidity typically translates into reduced price volatility, which benefits all market participants. A more stable Ethereum market would be more attractive to long-term investors, and could encourage further institutional adoption. The potential benefits of Ethereum ETFs extend beyond the realm of investors and into the broader financial ecosystem. The approval of an Ethereum ETF would be a powerful signal of legitimacy for the crypto industry, potentially paving the way for further innovation and investment in the space. It could also encourage greater regulatory clarity and cooperation as regulators become more comfortable with the idea of crypto-related financial products. This, in turn, could lead to a more mature and robust regulatory framework for the crypto industry, fostering greater trust and confidence among investors and the public at large. Section 5. Expert Opinions, Weighing the Potential Impact. The prospect of Ethereum ETFs has ignited a flurry of speculation and analysis from industry experts, with opinions ranging from cautious optimism to outright exuberance. While acknowledging the potential risks, many seasoned observers believe that Ethereum ETFs could mark a pivotal moment in the evolution of both the crypto market and the traditional financial system. Let's examine some of the prevailing viewpoints on this transformative development. Cathie Wood, founder and CEO of ARK Invest, a firm known for its bullish stance on disruptive technologies, has been a vocal proponent of both Bitcoin and Ethereum ETFs. Wood believes that ETFs could open up the floodgates for institutional investment in cryptocurrencies, unlocking trillions of dollars in potential capital. She argues that the transparency and regulatory oversight provided by ETFs would address many of the concerns that have kept institutional investors on the sidelines. Wood envisions a future where cryptocurrencies become an integral part of diversified investment portfolios, and she sees ETFs as the key to unlocking this potential. However, not everyone shares Wood's unbridled optimism. Some experts caution that the road to Ethereum ETF approval may be long and winding, with the SEC likely to proceed with caution. Spencer Bogart, a partner at Blockchain Capital, acknowledges the potential benefits of ETFs, but stresses the importance of a thoughtful and measured approach to regulation. Bogart believes that the SEC will prioritize investor protection above all else, and will need to see clear evidence that the Ethereum market is sufficiently mature and resilient before granting approval. Adding to the chorus of voices, Hester Peirce, a commissioner at the SEC, has been a vocal advocate for greater regulatory clarity and innovation in the crypto space. Peirce has criticized her own agency for its slow and cautious approach to crypto regulation, arguing that it has stifled innovation and pushed investors towards less regulated offshore markets. While Peirce's views do not necessarily reflect the majority opinion within the SEC, her outspokenness highlights the ongoing debate within the agency and the challenges of balancing investor protection with the need to foster innovation. Section 6. A new dawn for digital assets. The potential emergence of Ethereum ETFs marks a pivotal juncture in the ongoing saga of cryptocurrencies and their integration into the global financial system. While significant hurdles remain, the growing momentum behind Ethereum ETFs suggests that we may be on the cusp of a new era for digital assets, one characterized by greater institutional adoption, regulatory clarity, and mainstream acceptance. The stakes are high, and the outcome of this unfolding narrative will have profound implications for the future of finance. The SEC's decision on whether to approve Ethereum ETFs will be a defining moment for the crypto industry. A green light from the regulator would signal a major shift in its stance on cryptocurrencies, potentially opening the floodgates for a wave of new investment products and services. It would also bolster the legitimacy of cryptocurrencies in the eyes of institutional investors, many of whom have remained on the sidelines due to regulatory uncertainty and concerns about market integrity. The influx of institutional capital could fuel further innovation, price appreciation, and mainstream adoption of cryptocurrencies. However, it's crucial to acknowledge that the path forward is unlikely to be linear or without its share of challenges. The SEC, mindful of its mandate to protect investors, will likely proceed cautiously, scrutinizing ETF applications rigorously, and potentially demanding further safeguards and market reforms. The crypto industry, for its part, must continue to mature and address concerns about volatility, manipulation, and illicit activity. Building a robust and transparent ecosystem will be essential to earning the trust of regulators and paving the way for long-term sustainable growth. As we stand on the precipice of this new frontier, one thing is certain: the world of finance is undergoing a profound transformation. Cryptocurrencies, once relegated to the fringes of the financial system, are rapidly gaining mainstream acceptance, driven by technological innovation, shifting investor preferences, and the limitations of traditional financial infrastructure. The potential arrival of Ethereum ETFs is but one manifestation of this broader trend, a harbinger of a future where digital assets play an increasingly prominent role in our lives. Whether this future unfolds as a seamless integration or a tumultuous clash of ideologies remains to be seen. However, one thing is for certain: the journey will be fascinating to watch.